Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe, the bank holiday edition for Sunday, the 25th of August. Starting off with the FTSE 100, which had a nice end of the week. We bounced above a rising 50-day line around 82.10 and had support points above that feature, which is normally a leading indicator on the upside. This looks like a mid-move consolidation after the bear trap rebound from below 80.50 that we had earlier in the month. Initial target here, the top of that red triangle there from May. 84.20, and then up after that 86.30 at the top of the rising trend channel there from September last year. On the downside, if we do break down, not looking for anything worse than the floor of that channel and the triangle floor there at 80.35. RSI at 56 bounced above neutral 50, again another leading indication on the upside, so we are quietly optimistic that this market will head higher. The DAX is next, and here picture one of improvement after the rug pull that we had at the start of the month. We've closed two gaps and we're above the 50-day line there, rising at 18,200. Closed the week basically on that resistance line there from May, 18,600. In fact, closed just above that, and looking for progress towards the top of that rising trend channel from back in October as high as 19,800. by the end of next month or even sooner. We do break down, not looking for anything worse than 17,700, and that's the 200-day moving average and the April support line projection. The Dow is next, and here, similar pattern to the markets we've looked at so far, with the market improving over the near term, presumably on interest rate cut hopes. We've broken the July resistance line there at 41,000, above that, looking for the top of the rising trend channel from this time last year as high as 42,700 by the end of next month. Ideally, we stay above the top of the latest gap there, 40,300, ahead of a move to new record levels. Moving on to Bitcoin, which has had a few tough weeks, but it looks like it's finally on its way, on the basis that we've now got the 50 and 200-day lines both rising. That means we're about a week or two away from a golden cross, the run up to a golden cross, typically strongest part in the cycle, and looking for 70,000 relatively quickly over the next 2 to 3 weeks, while we're above that 50-day line there at 61,800. Ideally, we even stay above the 200-day moving average at 63,250, but maybe that's asking too much. The RSI at 57, so right in the box seat for that move, long-awaited move now to 70,000 and then beyond. You can see the top of the channel there heading towards the upper 80,000s, maybe 87,000 by the end of next month if everything goes well. But obviously we have dithered for the last 4 or 5 months, so maybe one should extend the time frames on the upside. On the downside, hoping that there won't be anything lower now than the old July support there, 54,000, if we have to dip again, which hopefully we will not. Going on to gold, and this has been the star of the show over the recent past, and looking for further progress, hopefully over the near term. Rising trend channel there from back in December, top of the channel there, heading now towards 2640, which is pretty impressive, or would be impressive if we hit it by the end of next month, or even sooner. Support coming in at old resistance, the old initial August resistance around 25.20, and above that, hopefully a straight run towards the top of the channel. On the downside, not expecting anything worse than recent intraday support, mid-month support around 24.70, 24.80 at worst. RSI has bounced multiple times at neutral 50 and is now actually bouncing above neutral 50 at the 55 zone, which is a very strong setup, and does suggest that hopefully we'll have decent run in coming days and weeks. Moving on to the stocks, and starting off with Alien Metals, and here, I haven't looked at this for a while, but it looks as though it's well perched and well positioned at the moment, with a consolidation above a rising 50-day line, just breaking out there through recent neckline resistance at 0.14. Initial target there, the 200-day line at 0.18, and then looking for 0.28, maybe as soon as the end of next month, at the top of that rising trend channel from the turn of the year. But stop loss there, obviously the 50-day line, 0.13 for those near in the stock. Double bounce for the RSI above, at and above neutral 50, which is also a leading indicator on the upside. Onto a stock which I wish I'd looked at a bit more, but here it is today. Argent Biopharma, here we've got a broadening triangle base after the sell-off in the stock, ongoing sell-off, a bear run for the shares. Here you can see that we've got the broadening triangle there from basically April, top of the triangle there, heading for 25 pence. And we're looking for that while we're above the 50-day line at 17 pence. You can see that there's been a bear trap island reversal there, going to new lows and then gapping up, which normally means the market's been wrong-footed and we will head higher. Next up is Celadon, where the idea that the shares would bounce after the latest RNS proved to be correct. Here we've broken recent neckline resistance at 30 pence. Above that, best case would be to fill the gap up to 52 pence and maybe even exceed our initial expectations of a move into the upper 30s or low 40s. So looking a little bit better there than for quite some time. Gold obviously underpinning some of the gold stocks, and that's filtering through to Conroy at the moment. Here we've broken the 50-day line for the first time since April, and that was at 6 pence, and we were looking for the top of the falling trend channel there from basically the autumn of last year, 9 to 10 pence. Maybe we can sneak up to the 200-day line near 11 pence over the next couple of weeks or so, but the key here is staying above that 50-day moving average. Corcel is next, and here, covered this before, or covered this recently. Here you can see that we've got this broadening triangle base, so we've got support above a rising 50-day moving average. Initial target here up to 0.2 pence, which we narrowly missed on the first attempt last week, but hopefully we'll get there over the next week or two. If you're a fan of the shares and want to see more, then probably resistance on the way down, which was 0.28, could be the next target, but obviously at the moment that feels as though it's a long way away. The other plus point is the bounce for the RSI above the neutral 50 level, which is also a leading indicator on the upside, or can be. Kazera is next, and here, nice setup of late. So we managed to gap up to our target there, which was 0.8 pence, and above that, looking for a fresh leg to the upside. Upper parallel of that rising trend channel base heading for 1.13 pence, and we're looking for that by the end of next month, especially if we can remain above recent resistance, 0.75. And the rally started there with bullish divergence, and also we've got a rising 50 and 200-day lines, suggesting that we'll have a golden cross over the next couple of weeks. The run up to the golden cross, or a golden cross, tends to be the strongest part in the cycle. Mobile streams also coming up with the goods at the moment. Here you can see that we've had a decent start to a recovery after a long time in the wilderness. Rising trend channel base pushing through the 200-day line for the first time since back in October. That's at 0.05. Initial target here 0.063. Ultimately looking for as high as 0.09, maybe by the end of next month, which is the upper parallel of that rising trend channel base that we have. Don't want to see the market really back below initial August resistance at 0.04.5. Next up is Macango, which seems to be also in recovery mode at the moment. The position was that we had a bear trap gap reversal back last month, in fact, and above the old March support there, 5.25 pence, looking for an initial target there at 7 pence. Best case would be up to 11.5 pence by the end of next month, which is the top of that triangle there from back in January. On to the stock of the week by some distance, both on a fundamental basis and a technical basis. The reason for saying that is that we had the mid-move consolidation breakout through 1.15, but we hit our target at 1.2 pence. So that's the second target there, and we're looking for third target as high as 1.7 pence. We managed to get up to 1.625, so just missing that, but obviously nobody's perfect in these things. Ideally, we stay above 1.35, which was the resistance initially for the stock after it came to market, and hit 1.7 pence, hopefully over the next week or so. Ideally, there is no price action now back below 1.2 pence. Obviously, it's significant here that we had the stock came to market at 1.25, so people finally on side there on that situation. Premier African is next. Had a bit of a mention in weekend markets. Well, in fact, it always gets a mention in weekend markets, but this time shares have gone up quite well. We were suspecting that the shares would turn around on the basis of the extended uptrend line in the RSI window, and that tends to be a leading indicator on the upside. All that's missing now, I suppose, are more days above the initial August resistance there at 0.068. Initial target, obviously, the 50-day line at 0.08, but best case would be up to 0.12 by the end of next month. Obviously, fundraisers permitting, and obviously the stock has had a bit of a rough ride in the recent past. Moving on to a stock which has had a very good ride, which is Roadside Real Estate. Here, a beautiful rising trend channel there from the beginning of the year. Top of the channel there, heading for 24 pence, which we were hoping for by the end of next month. We might even get that a bit sooner than that, maybe mid-September. And really want to see the share stay above the old July resistance at 16 pence, ahead of that further ongoing move to the upside. Shuka is next, and here the idea that the shares were going to bounce off the floor of that falling trend channel from this time last year at around the 4 pence level has proved to be correct. We managed to close above the bottom of the gap there from earlier in the month at 6 pence. Above that, looking for a gap fill up to 8 pence, and maybe heading as high as 10 pence by the end of next month. But it would be nice if the shares stay above 6 pence in the meantime. On to Simac Atlantis, which has had a bit of consolidation of late, but this looks like an interesting situation. Higher trend channel can be drawn now from back in June, and the floor of the channel just above the 50-day line at 2.25 pence. While we're above that, looking for up to 4.4 pence by the end of next month, and a nice converging triangle situation there, looking for that to break out hopefully over the next few days. Thor Explorations is next, and here covered the stock during the week and was looking for a 19 pence at the top of that rising trend channel base, ultimately as high as 23 pence by the end of next month. What I didn't say previously is that both the 50 and 200-day lines are now rising, so that suggests we're heading into a golden cross over the next couple of weeks, and the run up to a golden cross tends to be the strongest part in the cycle. Maybe the shares will also be helped by the mention in the papers that we've just had for the company. Moving along to Upland, which after a bit of consolidation near the 1 pence level, looks as though it might be ready for a bit of a rally, a sort of W-shaped turnaround. There's an old support line projection there from December at 1.75 pence. Maybe the shares can head towards that while we remain above recent support coming in just below the 1 pence level. I think I said before, anything under a penny looks to be bargain basement territory for the shares, and it might be slight exaggeration, but it seems to be that the shares have support just under the 1 penny level. Finishing off with Euru, and here not really much to chart, but for those who are interested in what the possible upside here may be, if it continues to keep moving, then it could be up to the top of that broadening triangle from the beginning of, or the summer of 2022. That's heading for £2.60, and that is valid as a target while we're above recent resistance on the way down around the 1.30 pence level. But obviously that could go anywhere given the state of probably the liquidity and the spread. That's it for me today. More updates during the week.